Every investor knows the buy call is only half the battle. How do you make the determination as to when to sell a holding?
That's a good question, and it's the most difficult part of our business. And we have a great team of analysts, and we're always working that angle and trying to improve that. I've been in the business 18 years, and it's still the hardest part of the business for me. I think our team is very good at getting good entry points. We're really, if you're a long-only investor, bottoms-up stock picker who, we run a concentrated portfolio, so we have a very high level of security level risk. Idiosyncratic risk is very high. The average weight in the Russell 2000 might be 20 basis points. We're out with an average weight of 2% for each of our names. So we live or die by how well we pick stocks. So it's a batting average play. So, our analyst teams are really always striving to improve their batting average. And as part of that process, you have to get good entry points, which I think we're very good at. And I think the team, with the experience level we have, we're pretty good at getting out at stocks at the right time too. We're not perfect. I think if we have a bias, we'll be in early and get a very sharp increase in the stock price, and maybe we're guilty of selling too early. I think that's probably the one part of our process we're trying to refine and improve. But it's very hard to bottom tick and top tick the same stock. In a perfect world, that's what we would want to do. We strive to do it every day, but the sell discipline is the really most challenging part. We have some rules of thumb that we look at. If a company goes down 20%, it's automatically reviewed to reconsider the original investment thesis, to understand, to make sure that we're still on board with what the proposition was when we first bought the stock. So that'll be the first test. If we can't get there, the stock will be sold for a better opportunity. Sometimes the stock just reaches the target price, sometimes very quickly. Our team has a 1 to 2 year time horizon for each of our securities, and sometimes the stock gets there much sooner. So the question is, well, what did you miss that the stock reacted so well so soon, and is there more upside? Or is there really not, the risk reward is not favorable? We try to find 3 or 4 units of upside to 1 unit of downside for each stock that we recommend. And if we can't get that balance, or that balance goes away, that's probably a stock that's a candidate for sale. Sometimes a company just misses and the fundamentals are unfavorable, and we feel it'll be an opportunity cost to hold the stock. So that's another candidate for a stock that we might want to sell and not maybe add to if we think it's going to take a long time or there's a lot of uncertainty around the security or the company. We'll probably move on from that company. Sometimes a company grows to be too big as part of the portfolio in terms of the actual size. So from an individual level risk, we're very risk tolerant, but if a stock gets to be over 4 or 5%, maybe it's just too much for the one name. We'll reduce the weighting in that company. And sometimes it's just the last item would be the market capitalization of the company gets to be too big and it's starting to drift our fund up to be no longer a small cap. If we have too many of those companies that do very well, or we have a bias to buying too many of the larger market caps, small caps, then we might not be considered a small cap fund. So we're going to stay true to the mandate, which is really to be a small cap investor looking for capital appreciation.